Well, what a year it has been. Global shares are on track for their best yearly run since 2019. The S&P 500 sits a feather's throw from its all-time high, looking to extend its annual gain to almost 25%. The Nasdaq rocketing almost 45% and eyeing its best performance for 20 years, fueled by, you guessed it, all things AI. And don't sleep on the small caps. The Russell 2000 had a big month in December and could be looking for an even better 2024. It's just been remarkable, the amount of conversation that has really been reinvigorated around some of the small caps and the calls going into 2024. But I think more notably here is how much of the permeation we might be able to see on the AI trade that still continues to thrust itself forward in 2024 as well, seeing as how that has been the story of 2023, or one of them.
Right. This is going to be what happens to these AI stocks is really going to be a very, very must-watch story in 2024. What do you do with a company like Nvidia? Shares up over 240% this year. Do you continue to buy this stock on this concern or fear that you're missing out on even more gains? Do you sell it on fear that things just can't get any better for this company? So that is one story to watch. But for this year, some of the things that caught our attention that investors are not necessarily focused on, maybe because they're completely obsessed with all things Nvidia and Magnificent Seven, it's really the drop in oil, biggest annual drop since 2020. Oil prices really pulling back here and coming, I think, as a key support to a lot of consumers in this country, also now having to deal with the return of student loan payments. Brad, you have gold prices headed there for their first annual gain in 3 years, up 13% on the year. Gold stocks doing pretty well, and the dollar really continuing to be under pressure, lifting a lot of profits for those multinational companies. Continued dollar weakness likely to continue to boost those overseas profits in the coming quarters.
Yeah, it's a few things. A matter of when rate cuts start to get initiated here, as you're thinking about what the calculus is across firms right now, it ranges. And so at the end of the day, some of the hopium in just how many of those cuts, and that'll perhaps be one of the themes that we can discuss later on in the show, how many of those cuts are actually going to come forward. If you ask Goldman Sachs, Jan Hatzius and his team, they're not looking for the Fed to actually lower rates until Q4 2024. So you better not kind of just sit back and ultimately expect any type of Fed Chair Jay Powell type of massive pivot in the form of cuts to come forward if you're over at Goldman Sachs. However, there are some competing thoughts with that. I think there are some calls for as many as 6 cuts next year.
That's ridiculous.
It's ridiculous.
That's ridiculous.
I mean,
come on.
Well, Nomura was looking for a cut earlier this year.
Let me tell you, if the Fed cuts rates 6 times next year, and this economy is in a recession, the stock market is probably down 40% from its highs. I mean, you don't want to necessarily see the Federal Reserve out there cutting rates 6 times. That'd be dreadful.
Well, because it says, and it really is foretelling, not even foretelling, it's acknowledging of the fact that something far worse is actually showing up in this data-dependent Fed and what they're actually monitoring and discussing. And it doesn't seem like that tenor is actually completely off the table even right now. It sounds like they are at least putting that discussion out there at these meetings.
By the time the Fed cuts rates 6 times, Brad, I think Nvidia will be $1,500 a share.
Oh, yeah?
Yeah, that's my prediction.
Okay. All right. I think the street high right now is like $700.